seeing that life for a long time. Getting this money, trying to stay,
Yo, what's good YouTube? This is my first ever video made, and in this particular video I'm going to be doing more of teaching. So this is going to be an educational video. Make sure you get your pen and your notes and start taking notes, because I'm going to be giving out some insightful information in this particular video. Anyways, let's get straight into the video. I'm going to be talking about two things basically. Don't mind the third one, just messing around. The first one is how to get a bias. Second one, how to understand imbalance and liquidity. Also, how to use imbalance and liquidity, which is actually very important. And the last one, how to see like SEER. Sorry, I'm already SEER. Yeah, I can be SEER. I'm already SEER. So yeah, let's make it out profitable. Let's get straight into the video. Anyways, we're going to be focusing on this particular zone, only this particular zone. So this is a range high, this is a range low, swing high, swing low, swing high, liquidity. Price came all the way for this particular liquidity. We swept it, we rejected, and we closed below this bearish engulfing candle low, making this particular low now an important low. So the next drawn liquidity is going to be this particular candle's high. This is showing you price is 100% going to go for this particular candle high. That is why I call it important low and important high. And price went for this particular high, and we rejected again and closed below this bullish engulfing candle high. Now this is showing you price is going to go for what? This bullish engulfing candle low, which is now an important low. So I'm going to be making more videos about this important high, important low theory, and I'm going to be making more videos explaining a lot of things to you guys, but for now I'm just going to stick with what I'm talking about. Anyways, after price came all the way for this particular liquidity right over here, we closed below this candle high, making this an important high. The next drawn liquidity is going to be the low. So you wait for the next month candle to create the first move, which is the Judas move. I mean, this particular open high is the Judas move. I don't know if I can outline it. Yeah, I'm going to make like 1,000 videos. 1,000. So the next drawn liquidity is going to be this important low, which we went straight for, and we closed below the important low, but closing below the important low, we still went for this particular sell side liquidity. If there was closure below the sell side liquidity, I would say price is bearish, and I would not anticipate price to come for this BPR. What is BPR? BPR is when a bullish and a bearish fair value. Let me just say two fair value gaps are like smooshing each other, like kissing each other. No, anyways, that's what a BPR is. So you can see this is a bullish fair value gap, a bearish fair value gap. Bullish got disrespected. While disrespecting it, it created a bearish fair value gap. So this is the range. We are trying to trade the range, guys. Don't forget, this is the range. We went straight for this particular important low. We went all the way down here and rejected. You can see now this is now a rejection week. If you don't know what rejection week is, don't worry. I'm going to be teaching. We're going to be teaching a lot, guys. So this is now a rejection week, showing price is still bullish. Bullish where now? We're going to trade to this rejection week high. That's like, this is the candle I traded because I was bullish on the XY all the way to this particular buy side liquidity. We're going to trade all the way to this rejection week high. But what are we going to do? We're going to wait for the new month candle, which is February 2026, to create the Judas move. Probably there would be like some sort of PDRA here. Would have waited for price to reach into before buying. So right now we're going to scale down to the lower time frame because we already have a drawn liquidity, which is this particular candle high. Now let's go to the weekly time frame. So on the weekly time frame, there's not much here. but there is a fair value gap which many traders would have been selling from. This is why you actually have to like start from the higher time frame if you're trying to get a bias. You can't just start from the weekly time frame and ignoring the monthly time frame. Even me, I should have started from the 12-month time frame, which is the yearly time frame, but I already have my bias on that particular time frame, which was still bullish, short-term bullish, I would say, but which was still bullish. That was why I actually. Wait, guys, give me a minute. I have to pick a phone call. Alright, I'm back. So that was why I was actually bullish. Anyways, on the weekly time frame, there's nothing much here. Let's scale down to the daily time frame. We're going to come back to the weekly time frame. I'm going to explain a lot there. So on the daily time frame, we can see price left this, which is a bullish fair value gap. So the new month number, the new month opening, we're anticipating for price to create a Judas move. Yes, create a Judas move to the downside. Sorry, I'm back again. So we anticipate price to create a Judas move, which is the first move to the downside before actually buying. And we already have a PD array on the daily time frame, which would have actually anticipated buys from. You can see price came into this particular fair value gap one. We closed inside this particular. I'm going to be explaining. I'll probably make a video. I'll probably make a video about candlesticks and how to like use them to your advantage. But we closed inside the body of this particular candlestick, closed inside this bullish fair value gap. So the low is liquidity, which price came straight for swept. We stay inside this fair value gap. We reclaimed inside this fair value gap 1, 2, 3, 4, 5, 6 before price started reversing to the upside. But while doing all this, you can see there is like clear rejection here. There's clear. I'll change this to another color. Let's use this. So there's clear rejection here, showing price is bullish. I mean, we already have a projection on the monthly time frame, which is bullish all the way to this particular liquidity. So yeah, scale down to the weekly time frame. This is where many traders fail to be profitable and actually lose money, because many traders would be selling this particular gap. I mean, they would be like, this is a bearish gap, why not I sell this bearish gap? And the bearish gap also has, well, also has this. So this is like a BPR. Many people would actually even wait for price to come all the way up here without understanding and without understanding of how liquidity works. I mean, if you trade with just imbalances, you're clearly blind. If you use imbalance without liquidity, you're blind. You're trading blindly. So many people sold this gap, I could tell. Many people sold this particular gap. You could see price reclaim into this bearish gap. Many people would have sold from here. They would have sold from here. Their TP, their take profits would have been at this particular low. But if you see like SEER, you know price is bullish. I mean, if you see like me, you'd have known price is bullish from the monthly time frame. So let's go down to the daily time frame. So on the daily time frame, let's assume you're a swing trader and you want to get your entry. You could actually do this, outline the 50% of this particular fair value gap. Your entry would be at the 50% of this particular fair value gap. Stop at this particular low at the fair value gap, the bullish fair value gap low, and you target this particular liquidity. You target the drawn liquidity, which was that liquidity. This would have huge you a 1 to 3 risk to reward ratio, which is quite decent, but let's assume we want a better entry. So let's go down to the 4-hour time frame. I will outline this particular low because this is an important low. This particular candle low, I'll outline it because I knew price was going to take it. Okay, let me zoom in a bit more. Alright, so I knew price was going to like take this particular low. Now let's go down to the 4-hour time frame. And on the 4-hour time frame, how were we supposed to like get our entry? You either wait for two things: a microstructure shift with a fair value gap, or a bullish price leg. Or bullish price leg, probably like showing bullish momentum with an IFVG. In this particular case scenario, after price sweep this particular low, we came up here and we dropped again. After dropping again, there was like a really bullish, you can see there was a really bullish engulfing candle, this particular candle. And after this, sorry, I'm stuttering. There was a bullish engulfing candle leaving towards an IFVG. So this IFVG, you can use this IFVG for your entry. Alright, bro, making this shit easy for you. You can use this IFVG for your entry. Your stop loss is going to be at this particular low, and you're going to target what? This liquidity. So this would have healed you a 1 to 9, which is super good. I mean, this is crazy. And let's assume you want a better entry, like a better entry. Let's see what was happening on the 1 hour time frame. So on the 1 hour time frame, it's going to be basically same thing. After price sweep this low, there was no market structure. Price did not even come here, sweep this particular candle high. And I mean, if price had sweep this particular candle high, yes, I would have probably used another block or CISD or whatever was available then as my entry. This is where your patience is tested. So at this particular level, price did not sweep this particular high after sweeping this particular low. Did not come for the high, but it came for this low. After that, there was this bullish move to the upside, and we had one. This is a breakaway gap. This is a fair value gap. This is a fair value gap. Your entry can be here. So looking for a better entry, like a very good entry. I'm going to also show you guys something else. Your entry can be at this particular level. And you can also come here, you identify where is premium and discount. This is premium zone, discount zone. So your entry is below discount zone, which is quite good. And you can set your pending order at this particular fair value gap, stop loss above the fair value gap low, or you can actually keep your stop loss at this low to play it safe. But realistically, your stop loss is meant to be here, and you're going to target our future targets, which is the buy side liquidity, bro. So this would have healed you a 1 to 15 risk to reward, which is quite good. Not even quite, which is really good. And basically that was, you can even scale down to a much lower time frame, like 30 minutes, 15 minutes, and you'd still get an entry. But I'd advise you stick with 1 hour, or preferably you can still stick with 30 minutes, but 1 hour and 4 hours would actually help you, most especially if you're not profitable, or I'd say if I don't even know what to say, but anyways, that's basically it. So go down to daily time frame again, and you can see there is no closure below this particular liquidity. We swept it not once but twice. We swept it one, and we came and swept it again, which is twice, but we failed to close above it. So price is going to most likely run for what? Any bearish PDR is, and I think we have one actually, which is this daily fair value gap. So I'm currently bearish all the way into this daily fair value gap, and I'm going to tell you how I use this as a correlation to a trade I took on XAU USD. So this is XAU USD. This is a trade I took on XAU USD. It's basically just a simple logic, but very complex, because I mean I'm SEER and I'm trying to make you guys see like me, you know. As if you want to see like me. Sell side liquidity, a range low, range high, range low, range high. We swept it, reject. What are we gonna run for? We're gonna run for the range high, which also has a bearish fair value gap. So that was what I anticipated on this particular pair. Let me look at the 4 hour time frame. What do we see here? Sweep this low. I'm going to probably, I don't know, I'll probably put an MT5 screenshots on this particular side just to show you. I don't even know how I'm going to do it, but I'm probably going to add an MT short screenshots. I took this particular trade from this particular level, which is this IAVG. You see this important low outline here. This was where my entry was. Bro. What's good, bro? Oh. So my entry was around this particular low, and I'm going to actually keep a screenshot so you guys can actually see. So, but regardless, you can see how simple it is. I mean, forex is too sweet, you know, most especially when you're a good storyteller. Because I mean, I think I'm a good storyteller. I've been telling you guys story. When you're profitable, you understand what price is doing, and yeah, that should be basically it. Right now, I think I'm gonna call it here. If you like this video, if you like this sort of videos and you find this video very insightful, please do well to smash the subscribe button, share and like this video. You don't even necessarily have to comment, but you can actually comment with questions, and also if you're finding something difficult to understand, you can comment with questions and I'm going to like check them out. And I'm also going to I don't even know what I'm going to say. So catch you all in the next video.
Well, I work on Wall Street. The Pearson Pierce. Have you heard of it?